Hello all. This particular session will cover about the three new features that has been introduced in Next Options. Now, Next Option, a dedicated option trading platform, is made freely available for all the Tradejini clients. Now, if you click on the option chain, we have come up with the three new features: option terminal, scalper, and straddle. Now, when you click on the option terminal, you can see we have introduced a new feature called as quantity and MTM. The idea behind this is the traders can directly see the open quantity and the mark to market gain within a single glance. So here, let's say if I'm bullish on the market, expecting the market price to go up, and I buy 25,000 call option, I just have to click buy button. With a single click, the order gets executed. Now, once the order gets executed, you can see the open quantity and the mark to market gain at any point of time. Now, let's say you bought this call option and you're in a gain of 1200. You want to exit. You can click on the sell button and the order gets executed. And here your position becomes zero. Now, what if you want to trade three lots at the same time? Then you can go to settings, change the lot size into three or let's say four, and each lot currently being around 75. At any click, I'll repeat, at a single click, let me take up 24,900 here. And when I click buy, feature of this particular mode is that you can see the open interest, theta, delta, IV, OI change. So you can at a glance get to see where the open interest is getting built up. So 24,550 had a 7 lakh quantity that got added to that particular strike. Now, if I consider this like a high open interest on a call option as a bearish signal, then I can go here, click on the sell, and the order will get executed there. Now, you can also see the same fields applicable on the put option. Assuming you want to see VWAP and additional fields, then you need to click on expand. So here I can see for the strike of 24,700, the VWAP was 204. Now, how the traders usually use it? So 24,700 call option, and if I add a indicator here, VWAP indicator. So here you can see the VWAP around 1148 was 191. Now this same data will be visible for you. You don't have to go to chart and see that. You can see the at that point of time, VWAP would have been 191. Now using that as one of the parameters to buy, probably if you had taken a long position here, then the price went up to 280. Then again at the same VWAP level around 211, the market took a support and then went up and closed close to the VWAP level. So watching the VWAP as option trader can give you an edge. So do practice that. Now, what if I want to see more details on the put option? Because when you expand the sheet, you can only see call. So you have to come here. You need to move the scroller down and you can expand and you can see same data applicable on put option. So in put option, if I go here, click on a chart, and if I add VWAP, you can see that around 245, the markets broke this VWAP level, came down, bounced back to the VWAP. Now, the new other tab which has been introduced is Straddle. Now, when we say straddle, that basically includes selling a call and put option of the same strike. So, assuming that you expected the market to remain at 24,700 throughout the day, then you could have sold a call and a put option, and the combined premium that you would have collected in the beginning of the day, okay, 24,700 call and put, you can see here you would have collected a net premium of 451. Then, as the market started going for a direction, the premium shot up to 471, and then it came down to 426 and finally closed at 427. Now, typically in a sideways market, assuming the market was very range bound and less volatile, the 430 premium can drastically go down to 370 due to theta decay. Theta decay means with the every passing minute or a day, the premium of call and put option would reduce. So usually when you expect the markets to be sideways, we use this technique. Okay, for a theta decay. Now, you don't have to send two orders. You can just deploy the straddle with one click. That is, click on the short button. So you would be selling two, 24,700 call, 24,700 put with a single click. So if you say execute at market, both the legs will get executed at the market price. Now, option premiums are highly volatile. So sometimes what happens when the markets are suddenly going down, your short call position will get executed, put may not get executed. So in order to avoid that problem, you can execute at market by using the market price. Now you want to use the last traded price as a benchmark to execute your trade. You can click on execute LTP. Now, if you want to execute on a specific price that you want, let's say you want to execute this at 215 and sorry, 225 and this at 210, you can set it and click execute. Both the orders will get executed simultaneously. Now, at any point of time, if you want to analyze it, click on the strategy builder. Both your call and put option which you want to sell, their data will be visible. You can check the Greeks. Okay, you can check the Greeks, that is delta, theta, decay, and gamma. So typically, like if the market remains at the same level, probably tomorrow at 24,700, then the call option and put option would decline by around 40 rupees. So the net premium from 427 would come down by 80 rupees. That is 427 minus 80, somewhere close to 347. It would come down by 80 rupees. So that data will be visible for you by looking into theta decay. Now, assuming you don't want this strike, you want to change the strike 24,600 and 24,600, you can change over here, and then the corresponding data will the Greeks will also get automatically updated. Now, assuming that you want to carry your short straddle position for the next day and you want to see how much would be your gain or a loss, you can just increase the Nifty level over here. Because remember, when you sell a call and a put, your risk happens when the market goes extremely upside or downside. Let's say market closes at 25,000 tomorrow. That time you have 1 day for expiry. You can see how much the premiums can change and what would be your impact on your portfolio. So basically, you are selling today at 275 and 161. That's your entry price. Since the market went up, assuming that your market is going to go up to 25,000, then you will have a loss in the call option because call option premium from 275 may jump to 435. At the same time, put option premium will decline from 161 to 27. So overall, you will have 10,000 gain here on the put and 12,000 loss on call. So 2,190 will be your loss. Okay, so you can do those kind of a forecasting using this feature over here. And if you're happy with it, click on trade. Your trade will get executed. By the way, if you feel there are too much of strikes, you can also adjust it. Say you want to trade only with 10 strikes. So automatically the number of strikes on the upside and downside with comparison to the current spot price will get automatically adjusted in the screen. As a result, you can easily scroll through it. So here 24,700, I want to short it. I click short. The idea here is that I expect the market to remain constant. Okay. Basically, you're betting on the market being neutral. That means you want to enjoy that 80 rupees due to theta decay. So what you're doing, you're selling 24,700 call and put. But what if the market catches as a trend? So there is an interesting trading strategy here, which a lot of people follow. So what we do, I sell 24,700 call at 220. Let me put the price here, 220. I sell the put at 207. Now, in case if the market starts going up, obviously I will have a loss on my call option. So what I can do, I can put a stop loss here for 50 rupees. My call position will get automatically stopped out. So I put a stop loss for rupees 50. So in case if the market goes up at 270, my call position will get squared off. But the best part is that as the market starts progressing, your put option from 207 may come down to 50 due to delta and theta effect. Remember, put will have a negative delta. So obviously, as the market goes up, the premium will reduce. And on the call on the theta side, you will get the benefit due to the decay. So here I can do one thing. I can select a stop loss. Okay, so what I'm going to do. Initially, I'm going to execute a, let's say, market order here of 220 and 207, 24,700 call and put. I will execute it. So execute at market. Now, after I execute this trade, I come back to the screen here, click on long. That means I have to put a stop loss here. I put a stop loss here at 270 and I put a stop loss for the below one around 257. So please understand the logic. That is, if the market goes up, my call option position will get squared off at 270. I enjoy the put option because the put option premium will start declining. But there can be a scenario that instead of market going up, okay, instead of market going up, what if the market starts coming down? That time, the 207 premium what I collected, I will repay back to the market. That is, I will square it off at 257 and I will let this 220 call option to decay. So you can put a stop loss for your call short position at 270 and you can put a stop loss for 24,700 put option at 257. So that way you are able to you are able to protect the position in case of extreme wide movements in the market. So I say execute and 275 and 265. Now the reason why we do this, I'll tell you that. When the price comes to 270 for the call option, currently you're selling it at a price of 220. Your order will be pushed to exchange. Now, when the order goes to exchange, what if the price reaches to 300, 350? You may not want to square it off at that rate. So that's a reason we ask you to give a range between which you want your order to be executed. We at Tradejini store the stop losses at the exchange level. So when the price touches at 270, your order would get automatically pushed to the exchange and it will be purchased between 270 to 275. In case of a highly volatile market, you can make it as 280 and this one probably 267 or 268 and click execute. Your stop loss orders will also be placed. Now you can go to the trades and you can see that. So you have 24,700 orders that got executed. At the same time, when you click on orders, you can see the trigger price here 257 and 270. So whenever the price reaches that, then it will get executed between the trigger price and the price limit price. Okay, so that's the one more feature that has been introduced in the straddle. So typically you go for a short straddle when you expect the market to decline sharply. Sorry, when you expect the market to be neutral. So you go for a short straddle. When you expect the market to be highly volatile, you can go long on it. So in Tradejini, we also give you that straddle chart. So you can go here, click analyze, click on uh, live option charts. You can see an ATM straddle here, how the prices behaved throughout the day. So it started at 427, then the market market remained. You can see the spot Nifty. So the spot Nifty here was around 2568. The straddle premium was 427 combined premium. The market remained at the same level. The straddle premium came to 395. You could have closed your position there, but assuming that you wanted to carry for a long time, then what would have happened? Then the market started to move upside 24,665. Because of this, the delta acceleration in the call option happened and the premium went up to 454. So some of you who want to take only a 20, 30 rupees ka stop loss, you could have closed your position there, booked the loss. And then in the later part, again, when the market started consolidating, the premium came down. So you can see the straddle chart over here live for all the strike rates on Nifty, Sensex, and Bank Nifty. It is visible to you. Buy arrow on the keyboard, up arrow on the up arrow on the keyboard. Your call option will get executed. Let me show you that. Okay. Now coming back to the new another feature that has been introduced is the scalper mode. So when you click on the scalper mode, you can click on the chart view. The best part is that whatever the strike you select, let's say 24,800 strike you selected, the chart would get accordingly updated. Now you want to add an indicator to it. You can click on the chart here, select the indicator, let's say VWAP, add it, and then click save. Click save. And when you come back and just refresh it, it would get automatically updated. So all uh, the Nifty call option and Nifty put option, both of them would have the VWAP. In the same way, you can change the time frame. Let's say you want to make the time frame of the chart for 3 minutes. Just put it as 3 minutes and click save and close it. Come back and refresh automatically. Both of them would now display 3 minutes chart. You can change it based on your convenience. Also, you can see how the OI has been moving on throughout the day. Here you can see the combined call put OI. So here probably the put OI started to increase compared to call OI, which basically indicated change in the trend. But again, it can sometimes be misguiding. So please do the research before you take any of it. Now, here also, if you want to change the strike, let's say you want to go and trade in out of the money put option. So you can go here, go to something like around 24,400 put. And here you want to buy out of the money, trade out of the money calls. You can change it. Any changes that you do in the strike, it would get automatically updated. Now you can increase the lot size to three, whatever the number that you want. Let's say I want to buy 10 lots at a time and trade 10 lots at a time. So you can change it over here. Now, the best part is that if you go to the keyboard and if you select this particular key, that is the up arrow, the call option would get purchased. Okay, so you're expecting the market to go up. As a result, you're expecting you want to buy a call option, then just go select this up arrow, the call would get executed. So I click the up arrow on the keyboard, the call option got executed. So whatever the lot size that you have set, based on that, it will be 10 into 75 will get executed. So here you can see I had put a order for 750. So probably currently around 450 got matched. So you can, so whatever the lot size you set, that will be executed. So assuming that you bought it at 115, this is an hypothetical number over here, since the market has been closed at 115. Now the premium increased to 120. You can see the premium here going from, okay, let's say you bought it at 100 and the premium increased to 120. That time, all you have to do is click on this side arrow, that is left arrow. So if you click on the left arrow, if this is buy call, then this would basically become a sell call. So I go here, click on the left arrow. You can see that 750 quantity of call option got sold there. And that will be visible if you click on this tab, orders. Now, what about put option? You guessed it right. You have to click on the down arrow. So you click on this down arrow, you can buy a put. So you will be buying a put by clicking the down arrow. So you can see here at 92 rupees, 10 lot, that is 750 got purchased. You click on the right arrow, the put option will be sold. Okay, so this design tool is extensively designed. What if you don't want to use the keyboard? You want to use the old style? Just switch off this shortcut key. Then you can just go here, click on buy put, sell put, buy call, sell call. So you can use the mouse. Assuming you don't want to use a keyboard, you're comfortable with mouse, you can do that. Now suddenly the markets have become highly volatile. You want to exit all your position. So what you can do, if your shortcut key is on, click on F6, all your positions will get automatically squared off. So this button, exit all, is F6. Assuming you want to only exit calls, then you have to press F8. But right now, F8. So all the calls, the short call positions, which assuming if I had, that would have got squared off, or if I had a long call, it would have got closed out. Now, here we have one more interesting fact. Let's say you bought a call option of 24,500, 23,800 call at 1031, and sorry, you had a short position in 23,800 call at a price of 1031, and the last traded price is 916. You can see the mark to market on the screen. Now, you want to enjoy the profit at the same time, you also want to set a target. So what you can do, you can set a target here called 450. That means from 1031, if the price comes to 450, you want to close the call option. At the same time, you can set a target here at 980. Sorry, stop loss. You can set a stop loss at 980. Now for a short put option, which you took a you took a short put at 91 premium. Now the price is 124. You are in a loss of 2000. Now the maximum risk that you're willing to take is up to 140. That means 124 you collected, but you want to pay back 140 and close the position. You can put a stop loss here at 140. Select the stop loss, put it at 140. Now, what if the premium starts going down? You want to take out the profit, then you can set it at 60. So target is how much the premium will decline. In case of a short position, you can put it as a target. In case of you taking a long position, long call, long put, you have done. And then you can put a target at a higher level than the trade that you have initiated. Stop loss according to that. So here you can put target and stop loss, and the system will take care of the rest. So I'll come back to you with more such interesting facts, features which NxtOption has introduced in the upcoming video. Uh, and in the description, I have given a link for our WhatsApp channel, a Tradejini WhatsApp channel, where we discuss about the market trends and all. Do join that. Thank you.